to all. Welcome to today's daily dose of market insights. There is something wrong with my so-called audio, so let me do a check again. Test 1 2 3. Mic test 1 2 3. Okay, so let me do a sound check again. So it seems to me that there's some problem with my audio system. Okay, I hope that you guys can hear right now. All right, good, excellent. Sorry about that, because earlier on there's some technical bits to set up my audio. So very good morning, to, very good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be Thursday, the 29th of August, 2024. So before we jump straight into our daily dose of market insights for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term intraday technical outlook on the broad-based cross-asset classes for today, let's have a quick recap what has taken shape yesterday in terms of key news event data and as well as their respective impact on the various performance of the major cross-asset classes. So first and foremost, we know that yesterday there was a release of NVIDIA, which is a AI juggernaut that has a higher component weightage in the S&P 500 and the Nasdaq 100. So what's interesting over here is that, as you could see on my screen, before the release of NVIDIA results, the S&P and the Nasdaq, both of them actually tumbled ahead of NVIDIA results. And bear in mind, NVIDIA results only released at the end of the US session yesterday. It means after the close of the US session, after 4 a.m. Singapore time today. But prior to the release, the market sold off first ahead of NVIDIA results. So kind of already anticipating a lackluster earnings guidance in anticipation of that. So what we could see over here is that for sure the S&P and the Nasdaq 100 actually underperformed yesterday, down negative 0.6%, and the Nasdaq is down negative 1.2%, while the Dow Jones and the Russell 2000, even though they outperform, but they can't close in the green. All right, so the Dow Jones was down negative 0.4%, and the Russell 2000 was down negative 0.6%. So if you look at the heat map yesterday, this was the heat map of the S&P 500. So very deeply in red was the semiconductor stocks, NVIDIA down negative 2% at the close of the US session. So the actually markets really anticipate that NVIDIA may release a kind of a lackluster earnings guidance or revenue guidance, which indeed is true. So if you look at NVIDIA share price right after the release of their earnings result, it actually tumbled further to negative 7%. So net overall, NVIDIA lose 9%. So that was actually more or less being already priced into the option market. So those who followed our daily dose yesterday, I highlighted to all the option change, and there could be what I call a pricing of either a plus 10% move or a negative 10% move after the release of NVIDIA earnings result. So I covered yesterday in my daily dose by looking at the option analysis. So for those who have a recap of what is it about, can take a look at yesterday's daily dose again. All right, so now the key thing over here is this was what happened in NVIDIA. So this is basically the key takeaway as being compiled by Bloomberg News, okay, as shown on your screen over here. So revenue, they managed to beat, earnings managed to beat. All right, so you have a great quarter, beating revenue estimate helped by strong data center demand. But however, the weak point or the lackluster point was the sales projection for the current period. That means talk about Q3 only came in line with analyst expectation, something that is disappointing the most bullish investors because analysts are actually expecting much more. They only came roughly in line. And the biggest reveal was an admission during the earnings released, I mean, during the press conference of the earnings release results, was there's an admission by the senior management of NVIDIA that it has problems with the forthcoming Blackwell design. So what is Blackwell design? This Blackwell is actually the highest end GPU product that NVIDIA is offering right now to power up AI models. All right, so this was actually the two catalysts that causes the after-market sell-off of close to -7% after the release of NVIDIA earnings, which eventually also dragged down Nasdaq 100 share price, Nasdaq 100 CFD index price after the US session close. Later, I'll touch on more about the short-term technical outlook on Nasdaq 100. So what we could see over here is that during the call, NVIDIA CEO, he remains steadfast in his optimism about the future of AI's use. All right, and also he also do believe that supply will continue to improve each quarter and will be much better next year than it has been in 2024. So a bit of what I call optimism bashing to actually soften the negative sentiment that was being forthcoming or has been already splash out by the after hours share price drop of NVIDIA. All right, so market now are kind of getting a bit concerned about whether NVIDIA futures revenue projection is able to continue to surge up on the upside, given that in the last 1 year or so, it keep on beating market expectation by double digit. And right now, the company has a so-called bottleneck problem in producing its next cutting edge GPU model called the Blackwell. All right, because it seems to me there's some supply issue right now as being highlighted by the senior management of NVIDIA yesterday. All right, so this is the key news and impact on the US major stock indices yesterday from NVIDIA. All right, so with that, now let me share with you all one key intermarket dynamics pertaining to the US stock market as well before we move on into the individual technical intraday outlook on the major stock index and as well as other cross asset classes. So the one that has been we call it highlighting in my past daily dose of market insights is this yield curve uninversion. All right, not yield curve inversion. It's called yield curve uninversion. Is by the spread of the US 10-year Treasury yield minus the 2-year Treasury yield spread. And basically getting the difference between the 10-year yield minus the 2-year yield. So what we could see over here is that we are now already in a reinforcement phase of this potential bull steepening taking shape. That means, i.e., what we could see right now is that the prior inversion of the yield curve is more or less has been negated. Okay, yield curve inversion at the start of January or June 2022 caused a scare to the market. Why? Because a yield curve inversion precedes a impending hard landing or recession scenario in US. And right now, this yield curve inversion has already uninverted and almost more or less back to normalcy. That means back to the positive territory by the bullish breakout of this negative 0.8% potential upside trigger that I highlighted in red over here. And right now, based on the current price action, is trading higher at negative 0.03%. All right, so slowly it's holding the inch upwards. That means indicating to us that the 2-year Treasury yield is falling at a slower pace than the 10-year Treasury yield. That means indicating that market is still pricing in a lower odds of a US recession. And concurrently, the Fed has now starts to actually cut interest rate, kicking start the interest rate cut cycle in September this year, and potentially could actually improve money supply growth in the US, which eventually will trigger down to economic growth as well. So this is what I call a potential bull steepening. And this potential bull steepening space, as it starts to take shape and is still in a very, very so-called young phase, or rather than not a mature phase yet, it could lead to what I call a outperformance of the current laggard right now, which is the value related stocks. All right, so I could see this ratio of the S&P value factor has now slowly starts to shape a higher low. We could see over here as the bull curve, the potential bull steepening of the US Treasury yield curve take shape, and it may take the front seat to actually surpass the current leadership from the momentum factor. So the momentum factor is basically S&P momentum ETF driven by the likes of the mega cap technology stocks that is riding on the coattails of the AI optimism play right now. So as long as the big if that the US economy doesn't slip into the recession, then this particular scenario will start to take shape. And what you could see over here is that the ratio between the momentum ETF and the normal S&P ETF has now started to shape a lower high. All right, and very quickly, this particular scenario, bull steepening scenario, has always started to play out in the potential up and coming outperformance of the Dow Jones Industrial Average versus the over the Nasdaq 100 and the Russell 2000 potential outperformance over the Nasdaq 100 as well. By looking at this potentially higher low of these two ratio that is displaying right now, showing the same similar impact caused by this potential bull steepening of the US 10-year Treasury yield. So what it means that going forward, we will start to see a leadership rotation change. That means the Dow Jones and the Russell 2000 in terms of the index perspective will tend to play a much more pivotal leadership role over the Nasdaq 100 and the Russell 2000 as the market starts to actually spread out into the other sectors which has been lagging in the last 2 years. That means, i.e., the Nasdaq 100, the mega cap technology stocks will now take a back seat. But this scenario will hold provided that there are upcoming US economic indicator like the non-farm payroll data that will be out 2 weeks from now. Next week will be the ISM Services Manufacturing PMI and the ISM Manufacturing PMI. If all these data are still showing robust US economic growth, there will be a lower chance of the US economy slipping into a recession, and this particular scenario will start to play out. All right, which I explained to you earlier. Okay, good. So now let us now immediately shift our focus now to the intraday technical outlook. All right, starting with the FX pair first. All right, so over here, let us start with the euro dollar. So no change on the euro dollar. This is play out within our expectations. Still recall that there could be a potential minor pullback, and this pullback managed to stall right exactly at the 111 short-term pivotal support level that we highlighted earlier on, and also the lower limit of this minor ascending channel that I drew from the low of 2nd of August. And what's interesting over here is that yesterday it tended to shape a slightly lower low, testing the 111 short-term pivotal support. And what we could see is the RSI hit the oversold region and shape a bullish divergence. So indicating that this downside momentum that is associated with the minor pullback has started to lose its bearish momentum force. That means, i.e., increasing the chance of a potential bullish reversal coming back into the euro dollar space. So with that, still maintain our short-term intraday bullish bias on the euro dollar. For sure, 111 figure will be the short-term pivotal support to maintain this bullish bias scenario. First near-term resistance to watch on the intraday for today will be the 111.60 level. A breakout above this level exposes 112.35 next potentially. However, if you start to see the euro dollar start breaking down below 111 figure level with an hourly close below it, that will actually invalidate today's intraday bullish bias on the euro dollar to expose the next near-term support level at 110.50 followed by 110 figure level. All right, very quickly will be the sterling dollar. So the sterling dollar, no change. Yesterday it actually dipped down but managed to actually help exactly at the 131.80 short-term pivotal support level that we highlighted yesterday as well. Okay, a bit of test of it there before shipping that rebound. So still no change there, using 131.80 as my short-term pivotal support level. Still maintaining that intraday bullish bias on the sterling dollar. First resistance to watch will be at 132.30 level over here. A breakout above 132.30 potentially exposes the next near-term resistance at 133.40, which is so confluence with the upper limit of this minor descending channel and a Fibo extension cluster level as well, which is the 2.618 and 0.764, also confluencing at 133.40. Only an hourly close back below 131.80, a breakdown below it, negates today's or invalidate today's bullish bias on the sterling dollar to actually kickstart kind of a deeper minor corrective pullback towards the next support level at 131.30. A breakdown below it exposes 130.40 next, which is also confluence with the lower limit of the minor ascending channel that I drew from the low of 8th of August. All right. So with that, we now shift our attention to the dollar pair against the Asia Pacific currency. So with that, let me expand my screen so that you guys could actually have a better chance to actually a better look at that picture. Okay, so I hope that the audio is still clear. All right, still the particular audio is still clear, so that you guys could actually still hear me. Okay, so with that, let us shift our focus now to the Aussie dollar. Okay, so for the Aussie dollar, no change. It managed to actually continues to shape in a series of higher high and higher low, holding right exactly at the minor ascending channel support that I drew from the low of 5th of August, and also trading above the 67.50 short-term pivotal support that we highlighted yesterday. So still maintaining that short-term intraday bullish bias on the Aussie dollar using 67.50 as my short-term pivotal support. First near-term resistance level to watch will be 68 figure level. A break above it exposes 68.47, maximum 68.90/69 figure level, which is the medium-term resistance zone. Only an hourly close back below 67.50 level will invalidate today's intraday bullish bias to kickstart a much more deeper minor corrective pullback to expose the next near-term support level at 67 figure level and potentially even 66.40 next, which is confluencing with the upward sloping 50-day and the 20-day moving average as well. Okay, moving on will be the dollar yen. So the dollar yen continues to actually trade below its medium term ascending channel resistance that is in place since 11th of July this year, and also the short-term pivotal resistance that we highlighted since 2 days ago at 145.45. So still no change there, using 145.45 as my short-term pivotal resistance, still maintaining that short-term intraday bearish bias on the dollar yen. Right now, the first near-term support level to watch will be at 143.45, this green line here. Only a breakdown below 143.45 potential see a kind of a much more forceful deceleration on the dollar yen to expose the next support level at 14160/40, which also confluence with the swing low area of 5th of August. Only an hourly close back above 145.45 will invalidate today's bearish bias to see a minor mean reversion rebound scenario taking hold, or a minor mean reversion rebound scenario taking shape on the dollar yen to expose the next near-term resistance at 146.50, followed by 147.50 next. All right, so that's for the dollar yen. And now let us now shift our attention to the major stock indices, starting with the Hang Seng Index. So the Hang Seng Index, you recall yesterday we do have a bearish bias, and this bearish bias has more or less really hit our support level 17,550 17,430, which is also the lower limit of this minor ascending channel that is in place since 5th of August. And what's interesting over here is that the RSI right now has started to shape a bullish divergence right at the oversold level. All right, over here, so indicating that the yesterday's downside momentum associated with its pullback has lost its initial, where potentially it increases the chance of a minor bullish reversal right exactly at this support zone as we mentioned earlier on. So hence, using 17,430 as my short-term pivotal support, we will flip to a intraday bullish bias on the Hong Kong 33. First resistance level to watch on the intraday basis, 17,920, a breakout above it exposes 18,070, 18,000/160. Only an hourly close back below this 17,430 will invalidate today's intraday bullish bias on the Hong Kong 33 to shape a continuation of this minor corrective decline to expose the next near-term support level at 17,270/17,185, which confluence with the 20-day moving average and the 200-day moving average as well. Okay, now shifting our focus now will be the Japan 225. So the Japan 225 has been pretty stuck in this narrow range since last Friday, and with that, it seems to us that price action now has starts to actually show a bit signs of momentum in the push up so far during the Asia session. So with that, it seems to me that the 200-day moving average is rather a significant short-term support level to watch for today. So given this potential so-called sideways compression of the Japan 225 since last Friday, potentially we could be in the midst of a Bollinger Band bullish breakout scenario unfolding on the Japan 225 or Nikkei 225. So if in this form of new positive element that is taking shape in the Japan 225, we will flip to a intraday bullish bias for today using 37,480 as my short-term pivotal support level. A breakout above 38,580, which is the 50-day moving average, also acting as a resistance, may trigger this bullish breakout scenario to continue its impulsive up move to expose the next near-term resistance at 39,270, followed by 40,055, which is the congestion area of 19th of July and 23rd of July. Only hourly close below 37,480, that means i.e. a breakdown with the hourly close below 37,480 will invalidate today's intraday bullish bias to kickstart the mean reversion decline scenario, that means i.e. a minor corrective decline scenario, to expose the next near-term support level at 36,885 slash 36,630 on the intraday basis. We also confluence with the 20-day moving average acting as a support as well in this similar zone. Now, with that, let us now focus our attention to the German 30. So the German 30, no change. Yesterday, it managed to shape a pullback. Then after the pullback, it managed to actually stop right exactly at the lower limit of this minor ascending channel that is in place since the low of 6th of August. All right, so this is something like a first support level to watch for today. Okay, at 18,730. So no change there, using the 18,590 as my short-term pivotal support level. Still maintain that intraday bullish bias on the German 30. First resistance level to watch on the intraday basis will be the all-time high at 18,935 slash 19,025 level. Only an hourly close back below 18,590 will invalidate today's intraday bullish bias on the German 30 to kickstart a much more pronounced minor corrective decline scenario to expose the next near-term support level at 18,350 and potentially a breakdown below it sees a deeper slide towards 18,040, which both of them confluence with the 50-day and the 20-day moving average as well. Now, back to the major US stock indices, starting with the US Wall Street 30, i.e. the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to did a slight but play around with the short-term pivotal support level yesterday. So we have a bit of excess over here. Okay, excess lower at this 40,870. All right, so a bit of excess over here slash 870. So as long as 40,960 slash 870 short-term pivotal support holds, we'll still maintain that short-term intraday bullish bias on the US Wall Street 30 over here. So given the fact that it's still trading in a bullish dynamic, and also given the fact that the RSI now has managed to shape an exit up from the oversold region that was actually being made yesterday, so still maintaining that short-term intraday bullish bias on the US Wall Street 30. Next near-term resistance zone to watch will be the upper limit of this minor ascending channel that I drew from the low of 5th of August, and also confluence your Fibo extension level of 0.328 at 41,425 slash 41,535 next. Only hourly close back below 40,870 will invalidate today's intraday bullish bias on the US Wall Street 30 to kickstart another leg of minor corrective decline to expose last Friday minor swing low 40,610. A breakdown below it sees a further potential slide towards 40,140, which confluence with the rising 20-day moving average as well. Now, Nasdaq 100. Okay, so we know that Nasdaq 100 is being more or less kind of influenced by the movement of Nvidia. So let's immediately take a look at Nvidia technical outlook. All right. So this was Nvidia share price yesterday at the close. All right. So this was a close. So it managed to actually held on to the range support level over here. And if you look at from a intraday perspective, okay, if you go to the hourly time frame, so this is the after hours share price move down, it break down during the after hours after the release of Nvidia earnings results and its so-called the revenue guardians and its speeches by the senior management. What's interesting over here is that we start to see some form of positive price action right exactly at the support level of 11620, which is the 20-day moving average as well. Okay, some form of bullish hourly bullish engulfing candle that's being formed, and we start to see a bullish hammer in the last hour of the after hours trading. All right, so some form of positive element that has taken shape right exactly at the 20-day moving average of NVIDIA. So if you go to the daily time frame, because daily time frame will not show you the after hours. In fact, the after hours chart right now is trading around this area over here. Okay, this area here after means around 116, 117 level. Okay, given just now that hourly candle, okay, sell off. Okay, this is a 20-day moving, so it's trading around this level here, almost at the 20-day moving average, acting as support, being highlighted by two form of bullish reversal candlestick that's being formed, a bullish harami followed by a bullish hammer candlestick in the last hour of the after hours trading. So with this kind of a positive element that has been detected in NVIDIA latest price action, so also on Nasdaq 100, back to Nasdaq 100, still recall yesterday we were neutral between 1990, 19,900 and 19,460, and price action broke down and immediately hit the next support level, which is the 200-day, 20-day moving average as well. Okay, this is the 20-day moving average, all right, at 19,117. So with that, and what's interesting is that after hitting down the 20-day moving average and 19,117, which we highlighted yesterday as well, the hourly RSI managed to shape a bullish divergence, right at the oversold level. So another positive element that has taken shape on the Nasdaq 100. So with that, this could be a potential tipping point where we may start to see a potential recovery again back in the Nasdaq 100 after yesterday's dramatic sell-off triggered by NVIDIA. All right, so using 19,117 as my short-term pivotal support level, flip to a bullish bias for today on an intraday basis for the Nasdaq 100, taking things one step at a time. First, resistance to watch out for on the intraday basis, 19,460, followed by 19,900. That was last Thursday minor swing high area that can't break up at the moment. Okay, at this moment in time. So only an hourly close below 19,117 will invalidate today's intraday to see an extension of this minor corrective decline to expose the next near-term bias support at 18,680, followed by 18,320 next. All right, so now moving off, next will be the USD. So for gold, if you recall yesterday, we do mention that the first support level, 2,500 level, price action came down at 2,500, still using the 20-day moving average 2,473 as my short-term pivotal support level. So as long as this 2,473 short-term pivotal support level holds, we'll still maintain that short-term intraday bullish bias on gold XAU/USD. A clearance above the current all-time high area at 2,532 unleashes another round of impulsive up move to test the next resistance zone at 2,588/2,595. Only an hourly close back below 2,473. That means a breakdown of hourly close below 2,473 will invalidate today's intraday bullish bias on gold XAU/USD to kickstart another round of minor corrective decline scenario to revisit 2,435/2,415, which also correspond to the rising 50-day moving average. Okay, lastly will be West Texas crude oil. So if you recall West Texas crude oil yesterday, we do have a bearish bias. So the bearish bias almost come close towards the support level that we highlighted, 7460/74 figure level, i.e. that is also a key Fibo retracement zone, taking into account of the last push up from the medium term symmetrical range triangle support level at 7315 is close to the golden ratio at 61.8%. So with that, okay, 61.8% here. With that, using 7460, 74 figure level, short-term pivotal support for today flip to a intraday bullish bias. And so given that the RSI has really exited from the oversold level, potentially there could be some form of minor rebound taking shape on the intraday basis for West Texas crude oil to revisit the near-term resistance level at 7660, which was yesterday's minor swing high and close to the 20-day moving average, acting as a near-term resistance. A breakup above 7660 will further up the recovery to retest this week high area at 7840, which also confluence with the 200-day moving average. Only a breakdown below 74 figure level may see the extension of this further weakness intraday weakness on the West Texas crude oil to revisit the medium-term range support zone at 73.15/72.24. All right. So with that, that actually sum up the intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right. So for today is a rather quiet session. I would say in the European session. So what we could see is that at 5 p.m. we do have the Eurozone economic sentiment data that is out at 5 p.m. for the month of August. So that could potentially impact the DAX, the German 30 and the Euro dollar. And we have the various Eurozone members reporting their preliminary inflation rate as well, starting with Germany out at 8 p.m. Singapore time. That could actually impact the Euro dollar. So this is the preliminary flash inflation reading for Germany, which is a key Eurozone member for the month of August out at 8 p.m. Singapore time. And what we have is at 8:30 p.m. Singapore time, we have the second round estimate of US GDP growth rate. I think that shouldn't be have much impact because this is the second round of estimate. All right, so, over here. So other than that, rather quiet US session for today. And early tomorrow Singapore time, we do have 7:30 a.m. We have the Tokyo CPI data that is out way earlier tomorrow at 7:30 a.m. Singapore time, and as well as Japan retail sales year on year 7:50 a.m. Singapore time. So with that, that sum up today's daily dose of market insights. I'm Kelvin here. Wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.